Stocks and bonds down, gold just barely up. And we see things moving in the direction of course, the weekly vertical crossovers when it comes to stocks. We're going to get into everything, but a reminder, our book, Charting Your Way to Wealth, we've just gotten in the largest shipment of books ever, our 7th printing. So keep ordering those books if you would like an autographed copy. You'll see in the show notes links in order to do it. We'll also have a link at the end of today's broadcast. And don't forget, Patreons, we would love to have you go to our Patreon page. You'll see a link also in the show notes to become a supporter. Guess what you're going to get at that first level? A lot of things. They're all listed there. Biggest one is going to be a monthly Q&A where we're going to review your favorite stocks just for you and look at them and figure out whether they are chartable or not. And then what charts you might use as far as time frames and all that goes. We're going to have a blast. We're going to do that once a month. Now, as people become Patreon members and supporters, I need to know from you what days you suggest. Is it a Tuesday evening, a Wednesday afternoon, a Friday evening? Is it over the weekend? I don't know. I'm going to let you guys decide. But again, become a supporter for the work we do here for free. The only thing we have for sale is, of course, the book. And we also have the Trader Journals, but we provide all of those to you for free. You can see the PDF in the show notes of the weekly worksheet, the daily worksheet, and the trade worksheet. Trying to remember all those things as I jump into the big review for the weekend. So buy the book, help support us, and become a Patreon supporter. Okay, now what I said to begin with is holding true. Remember the power of the weekly vertical crossovers. For those of you who are new, I'll put at the end, we'll have a link to a training on what crossovers are. In fact, I think I'll put both those trainings in there, both part 1 and 2. The power of these crossovers, when we have a crossover of the price percent oscillator through the red signal line going in either direction, that portends very important things. Typically portends either strong up movement, if the blue is crossing over the red going up, or the blue crossing over the red going down, strong down movement. And of course, we are looking for those changes all the time and then getting in and running on that entry point. Typically, it's at 10:30 the Monday following the close of the weekly candle. Now remember, candles aren't good to you until they actually close. A 15-minute candle only becomes a real 15-minute candle when that 15 minutes is up. Same with a 4-hour, same with a 2-day, same with a monthly, same with a weekly, same on any of them. So if it's a 5-day weekly candle, we monitor it during the week, but it's not a real candle and we don't have a crossover until that candle closes because it's subject to change up until that point. So what do we see now? We've gone into our 4th week of strong down movement on the S&P 500. We're going to brighten the screen up a little bit. Now we go from the weekly to the 2-day. What do we see there? Well, we see on this latest 2-day candle regarding, and again, remember, our Heikin-Ashi candlesticks show what? Average pace. They are computed completely differently than your average candlestick. And I know we have a lot more people that join us on the weekends. Those of you who don't know what that's about, we'll also attach that to the training at the end of the broadcast on the Heikin-Ashi candlesticks. You can also find all these trainings at the website and at the YouTube channel. If you're not already signed up and receiving our newsletter, you need to get it because we include all of this every single day. You get our daily review and our comprehensive review and forecast in your email box as soon as the broadcast is done, and I can upload it and send you out the email and do the blog post. So, what do we see going on? Well, we see that the derivative oscillator is continuing to lose downward momentum. Price percent oscillator has actually rotated heading up somewhat. Again, some warning bells and shots and signs going off there. We have a green candle that is drawing, and of course, the prior candle that ended on Wednesday, the 31st, was a green up candle. Now we have a green open box candle pretending stronger up movement on that 2-day chart, having pushed through the 2-day trend line. The weekly trend line, of course, has not been violated, but again, some warning bells and things going off there. We look at the 4-hour chart. What do we see now? This gives us some hope, particularly with the down movement for the day, 0.63%. I told you, if you remember, that we were having sort of a topping around the 274 mark. If you listened yesterday, well, it looks like sort of stopped there. Rotated back over in the afternoon. Now watch as the week progresses. Derivative oscillator on the 4-hour chart. Again, it's our weakest chart. But all things being equal, remember, charts move in the direction of the largest chart, which is the weekly, which is down. We see a red down candle at the end of the day. Let's see how the week starts off, and if we do have a crossover going back down on the 4-hour chart, since the 2-day and the weekly are primed for a down move, you could look for getting into a short position. Now you say, what are you talking about? What short position? Well, the reason we use, again, for our daily reviews, just for training, the S&P 500 as represented by SPY, the exchange traded fund, is because it's much more simple to deal with. We don't have all the issues you have with a stock, with earnings and warnings and all sorts of other stuff going on, X dates, all that. What we see, though, is as things start to rotate over, we want to pay close attention if indeed things cross over going down and give us another jumping in point. And if indeed that does happen and come to fruition, we want to be prepared and ready to jump into it. So what do? We could buy a put, or we can look at a short position on SH. What is that? That is ProShares short S&P 500. What does that mean? It means it moves in the opposite direction of the S&P. Whereas the S&P was going up until the afternoon where it started going down, SH, the inverse, was going down until it started to pop up in the afternoon. So pay attention to that. What you actually see is the opposite, and you have the ability to jump in and ride that. And it moves up at about the same percentage. Since it is a simple short, there are double shorts, triple shorts. This is arranged to move penny for penny, dollar for dollar, well, percentages. It's arranged to move in the same percentage in the opposite direction that the S&P 500 goes. So if the S&P 500 is up 5%, you would expect SH to be down 5% and vice versa. So again, a little bit of sophistication here, but it's the way that you can practice trade all the time virtually whenever you have charts that you can actually follow. So let's go from SH, S&P 500, the SPY. Let's go from those charts to the Qs, the NASDAQ 100, the tech stocks. What do we see there? Again, 4 weeks of strong down movement. We actually had that weekly vertical crossover all the way back on the 21st of September, the week ending then. Whenever we talk about the weekly chart, the dates we use are the date that candle closes, and that's always on a Friday. Well, if the markets are closed on a Friday, it'll be on a Thursday, but typically on a Friday. And then we saw the Qs, the NASDAQ 100, slide sideways for 2 weeks, and then in earnest start moving down over the last 4 weeks and accelerating that down movement, price percent oscillator and derivative oscillator. We go to the 2-day chart. What do we see there? Well, somewhat similar to the S&P 500, moving up over the last 4-day period, just at the end of the candle, piercing through, ending above the 2-day, still below the weekly derivative oscillator, losing momentum. Price percent oscillator not turned up like the S&P 500, still heading down, but weakened. Then we go to the 4-hour. What do we see there? Well, we see even more of a move over in price. Derivative oscillators lost energy. Price percent oscillator still heading up but weakened. So again, we'll watch and see if the power of the weekly vertical crossover sustains itself for another week. And if we have a jumping in point, we will let you know. Be prepared for that over the course of the week to do a practice trade. And when you do a practice trade, don't ever do one without filling out your trade worksheet. Those are available, as I said earlier, for free in the show notes. There's a PDF. Print those out. Have them sitting by your computer. And That's where you note everything, and it really becomes part of your trader's journal where you can use that to help you really accelerate your learning process. Okay, going from QQQ now, 2 more charts to look at. On the weekly, TLT 20-year bonds. Well, we have a down candle for the week. Derivative oscillator piked over, going down. Price percent oscillator piked over, going down. Derivative oscillator losing a little bit of momentum. Weekly chart still in a full-scale down movement. We go to the 2-day chart. What do we see there? Well, isn't that interesting? It crossed over back on Monday the 29th and then headed over since then and ended the week crossing back over, going down. Now, typically when we see this kind of movement where a crossover loses its energy, usually what happens is when it pierces and then immediately rotates back over, it's going to keep going down, usually. So keep that in mind. And again, note those kind of things in your trader journals, on your daily market and your weekly market worksheets, and learn those lessons, and see, does it always work that way on TLT? Maybe. Does it always work that way on the Qs? Yes. I mean, now I'm not saying that, but I'm saying you need to learn those things and note those down, particularly the time of year, what season you're in, and what the chart is. So pay close attention to those things. Those can be tells that can be extremely valuable for you. Now, of course, now that the 2-day is rotated over, going down, you can look for a jumping in point at some point after a pullback on the 4-hour chart for a jumping in point. So we see things rotated over back on the 31st in the morning on the TLT 4-hour chart. So again, we see the derivative oscillator accelerating, going down, price percent oscillator heading down. That's where we ended on bonds. Again, that's interesting. And bonds actually pushed through the last floor around 112.85. They've actually dropped down to 122. We've got to go back a long way to see bonds that low, don't we? Wow. So again, what's that telling you? Well, pay attention and continue to watch what happens with bond prices. Okay, that's where we are on bonds. Lastly, we go to gold. Just love gold. What's gold doing? Well, remember we had a weekly vertical crossover on the week ending the 5th of October, right at the beginning of the prior month. Gold up for 3 weeks, pulling back some. It's not a red closed box candle, so it's not a solid red candle. It is showing us a pullback on gold, so not going up at the same rate it had been. As far as the Heikin Ashi candlesticks go, we see an acceleration in the derivative oscillator, and the price percent oscillator is heading up about the same pace it had been before. So as we dig a little deeper, going from the weekly to the 2-day, what do we see there? Well, the 2-day, remember we had that 2-day candle ending on Wednesday, the 31st of October, a pullback pushing through the 2-day trend line, and then this latest 2-day candle is up with the price percent oscillator rotating up, derivative oscillator continuing to lose energy. Now remember, we have the 2-day and the weekly both going up. So what's happened to the 4-hour? Boom, it is trying. It has not had enough energy yet to cross over going up, but we see the derivative oscillators turn positive. So watch gold on Monday. If it has enough energy to start crossing over, if it's really just sort of tested its limits and now it's ready to break out and move above that 117 mark or so, 117.13, something like that. If it's ready to press above that and really accelerate and take off, be ready to jump into a practice gold trade, okay? So watch for that during the week too. Hope you've been taking notes, filling out your weekly market worksheet as we go. That's one way to do it, or just sit there and copy this stuff down. Put it into your trader's journal. Get ready to act on it as we go through the week. If you're just listening to me, my friends, you are maybe just wasting your time. I want you to get the most out of this. And the way you're going to get the most out of what we talk about is by following us 10 minutes. I know I've probably gone over some today, but I was just excited. And I hope you don't mind that. But you need to follow us every day for 10 minutes. Fill out those daily market worksheets. At least take notes down. Make notes as to what you want to pay attention to. And then do as many trades as you can when you see them develop, and practice. And stuff we don't talk about, things you think of that seem a little unorthodox, try them. You're not using real money. We're an education firm. We're not a stock calling service. Practice everything and see what works. Share with us what you find out. We're happy to hear it and to help you sort of work your way through it. That's the reason we're excited about the live Q&As we're going to be doing with our good friend level that we've established over at Patreon. So thank you so much, my friends. God bless. Hope you have a great weekend and you're excited about the coming week and the possibilities in the market. God bless. From the whole team here at Charting Wealth World Headquarters.